All right. Welcome everyone to the Financial Freedom Through Apartment Investing, an affiliate of the GOB network of apartment investors, and this is the New York chapter. I am your host, Mark Caesar, and I have Aaron Goins as my co-host. Thank you guys for coming on. I appreciate you guys jumping in. I know this seems to be like a very heavily debated, anticipated event, especially with our guest host today, which we all are familiar with, Mr. Darryl Murphy, GOB's own. So, not gonna hold for the sake of time. I'm not gonna do a lot of talking. Just a few things I would like to mention. If we can hold the questions based on Daryl's presentation to after his, for the sake of time, to after his presentation. Feel free to drop your questions in the chat, or you can ask when he's finished, and we will try to have about a 10-15 minutes Q&A where you can shoot all your questions to Darryl. And we would also try to get into a few breakout rooms, because there's a lot of people. I'm pretty sure a lot of new faces here. I don't know half of you guys, so I would like to get to know you all. So, Darryl, thank you for joining in, sir. The floor is yours. Take it away.
All right. Thank you very much. My name is Darryl Murphy, Darryl Murphy Sr. I am the host and of the Commercial Multifamily Mastermind meetings that's held every Tuesday at 11 o'clock Eastern Standard Time. So today's topic is real estate market analysis. Now, it's not the real estate market analysis that you may be thinking about. So I would like to give before I get started, I just want to give a little information about what made me what made me um, create this form, and where I got the information from. So I started investing in real estate back in the 1990s, early on, but I was on the residential side dealing with the single families. But I was as the years went along, um, I wind up uh, going to school, getting my license, and becoming a commercial multifamily specialist and a commercial agent with KW. And during that time, I had I read several books in reference to investing in commercial multifamily, and I went to several boot camps. And everywhere that I've read, it was this, they said the same exact thing, and that was you want to invest in areas with population growth, with household medium income growth, job growth, and other things. Well, when I start asking other investors, well, how much of a job growth? How much of an income growth? What? How much of a population growth? It was like, well, yeah, well, you just want to see growth. I was never able to get the specifics of what I needed. And so one day I'm not going to say that. One day I went to uh, a Zoom meeting with Neil Bauer. He was teaching. And Neil Bauer said he was going to have a class on how you can really get down into finding your market, the city and the neighborhood. So right there, that sparked my attention. Right there. I'm like, what? So I took the class, and I'm going to tell you, this is how much I loved it. I took it 3 times. Not one time, not 2 times, but 3 times. And every single time Neil Bauer says he's teaching that class, I go back to take it again. So without further ado, let's go ahead and get started. Oh, I need to share my screen.
One second. I think you should be clear now.
Okay, fantastic. Okay. So that's not the form. Don't worry. There it is. Okay. So if anyone's familiar with Neil Bauer and what I'm getting ready to show you, then you know that his form is different. It's nothing like this. So I took the information and I transformed it into this. And this is the form that my team and I use. All right. So I'm just going to run through this and then I want to take questions. Now, for the sake of time, I'm not going to go into the neighborhood. I'm only going to do the city. However, if anyone would like this form, all you got to do is shoot me an email, and I did put my information in the chat box. But over here in the gray area, right? Over here in the gray area, I have put the instructions of what you need to look for, where you need to go. Okay. Now I'm also going to show some other caveats as to where you could go to get the data. But I want to let you know that here are the instructions right over here. Okay. Right here. And if you follow the instructions, you're not going to have a problem. All right. Okay. So let's get started. So when my team and I, when we first got started, we wanted to know what markets we wanted to get into. And since I took Neil Bauer's course, I said, I taught this here form and I taught it to everyone. And I said, this is going to be our guide. Now, this may not work for everyone. This may not work for you, but but then again, it may. All right. So I'm going to show you. I'm going to pick a city, say a city that I'm interested in, and let's just say Phoenix, Arizona, right? Because that's one of the markets that I invest in. What I want to know is this city, does this city meet my criteria? Now, all of these cells, that is the answers, all these cells here, they're color coded. All right. These are color coded. They're going to change colors, whether if it's red or green. So let me show you. All right. So here we go. So what you normally would do, right? Oops, there you go. So I know I spelled that wrong, didn't I? I'm nervous, everyone. I'm just nervous.
Come on, you do this on the biggest stage,
I
Darryl.
know, right? I know, and I'm nervous all of a sudden. I'm
Not to
nervous.
be the nervous one here.
I'm nervous. Can you believe it? Phoenix, Arizona. Okay. So what I normally do, I put down the city first. Then, then what I'm going to do is go over here to Google. Now, some of you may already know what I'm going to do because I took this course before. But I will say to Google, and again, remember the instructions are right here. If you read the instructions, it's going to tell you what to do. It's going to say Google input, population, name of city, name of state. So all you do, you go over here to Google, right? Because Google's smart. I'm going to tell you, between Google and YouTube, you can't go wrong if you're trying to learn something. And if you're lazy and don't feel like typing it, just hit this right here, right? Phoenix, oops, do it again. Phoenix, Arizona population. Boom, there it is. So according to the instructions, right, you want from 2000 to 2019 or whatever that year is. Then it's going to tell you in the instructions on what to do next, right here, right? So Phoenix, Arizona. I'm going back as far as I could go. As you can see, it's only going to go back as far as 2011. So what you would need to do to get the 2000 number is, first of all, first, copy down your 2019 number for Phoenix, Arizona, which is 1.6 million people, right? And as you can see here, between a quarter million and a million, greater than a million, greater than 2 million, less than a quarter million. Well, this is 1.6 million. That's right here, right? So it's 1633. Okay, there you go. So that's, there you go. I want to make this a number. Oh, there. I was looking for, okay. So that's the number. Do I have too many zeros? Yep, I do. There we go. All right. So now I want the 2000. This here, now this just happened in January or February, that Google is not showing 2000. So what you do, all you have to do is go just like this. Put 2000. There it is. And it gives you the 2000 number. So now you take that. I'm going to copy and paste. Now you're going to see me. I'm not going to copy and paste in the cell because I want my colors to be right here. What I'm going to do is put it up here and in my formula. And there you go. Did you see that? It turned green. Now, if you read the instruction says you want 15% growth for cities over a million. Well, I got the 15 because here's 23, right? So now there's other instructions that you need to read. For each year after 2018 at 1.25% growth. Okay, right? But it also says you got to read it all at 1% for cities over a million and at 2% for cities under a quarter of a million, right? Use for, and listen to what this says, right? Use for the city, not the MSA. Well, why? Why the city and not the MSA? Because the MSA number, the MSA grabs not just Phoenix, Arizona, but it's going to grab the metropolitan statistical area, which is all the way around it. So your population is going to be, that population number is going to be greater than that. That's why when you're looking at a city, when you're looking at and putting your money into a city, you want to know what is the city doing, not what the whole MSA is doing. So in this case, you only want the city. You don't want the MSA. All right. You got 23%. But now you also must add 1% for cities over a million. So, okay, so that's for each year. So this is 2021. Just go ahead and make that 3 for over. Actually, make it 2, and I'm gonna tell you why. Hold on a minute. Let's go back for a minute. Let's go back. I'm gonna tell you why. This is why. You see this 2019? Well, they already accounted for 2019. The only 2 years the only time that we're accounting for is the time that's not here. So, and Neil Bauer's teaching is that if that cities should grow at a particular rate per year. And if there are changes in the city, he says there's not going to be a great change, like a big drastic change in population growth. It normally happens over time, not just overnight. Over 1 year, a population just declines. No. And I think the proof evidence of this is New York, California, those cities, if you look, it's like a slow decline, not just all of a sudden wake up and it's a big dip. So you could see trends that are coming. You could, whether it's good, bad, or flattening out, you can see trends that are coming. And so with that being said, we're going to take it 2019, and I want you to add the 1.25 for 1 year. Do not count 2021 because it's not complete yet. So put that, put the that 1.25% right here, right? And that takes you up to 25%. So you got a green. That's a thumbs up. That's a thumbs up. But suppose I'm just going to do this. No, I'm going to finish. Then I'm going to do something. Okay. So the next thing we want is the city median household income. Right now, I'm going to show you this. I'm going to show you what you can do, what I'm going to do. Then I'm also going to show you what you can do. All right. There are other sources that you can use. Right now, Neil Bauer uses this city data. All right. And my clicker doesn't want to work. So I'm going to put in city data. Right. So here we go. Spelling. Here we go. Put in Phoenix again. Phoenix, Arizona. Okay. Now, as you can see, all the information comes up. Okay. All the information comes up. So what we're looking for is right here, the city median household income. So we're going to go over here, right there, city median household income. And see how that goes back to 2000? Well, we're going to grab this number, this 41,000 right here, right? I'm going to copy. And you know something? Let's see if we could do this a nice, easy way. Like this, right? So paste 41,207. And then for 2019, it's giving you, see how that number, see how this turned red? You see that? But don't worry, we got to put the other half in. That may not be red. Okay. So here we go. 60,000, right? 931. Holy smoke, look at what happened. It turned green right there. So I got to open this up, everyone. But not, you don't want to see that. You want to see, whoa, hold on a minute. I'm opening too many things now. Okay, close. Okay, so let's open up this right here. All right. So again, what does the instructions say? You want 31.5% median household income growth between the year 2000 and the year 2017. Using the, and it tells you exactly what to do, right? It says this applies to all sizes. In 2021, he gives you a little addition because he taught this and I was there. He added this. He said in 2021, at 1.25%, all right, to the 31.5 above. Well, we went well over the 31.5%. So you don't have to necessarily add the 1.25, but I always add it anyway to show that between 2019 and 2020, that there should have been a growth in the median household income, and there was, okay, and there is, right? So 1.25. All right. So as you can see, I got a green here and a green here. So we got two greens, but let's see if the rest of these are going to be green. All right. And then we're going to discuss, suppose something is red. Okay. So next, I'm going to move this and let's bring this back down and let's close that. Close. Thank you. The city median house or condo value. Now, so what does the instructions say to this? Well, here it is. Look for 42.5% growth in median house or condo value between 2000 and the year 2017 using the city data, right? This applies to cities of all sizes. In 2021, at 2.5% growth to the 42.5. So let's see what the numbers tell us. City median household and condo value, $107,000 for 2000. And for 2019, what do we have? 266. We got it. Whoa. There you go.
Changed you put 10,702 in the year 2000.
Exactly. Holy smoke. See, I told you I'm nervous, Mark. I don't know. Why am I nervous? There you go. Okay, so what you're looking at here is 152% growth. Okay. So with that being said, we already have the 2.5, and as you can see, the growth went up greatly. You're looking for 42.5%. However, you got 152%. Now you got three greens. All right. So next, you want to see, well, let's talk about the instructions first. We're looking at the city changes in the crime level. Okay. It says right here, look for crime to go down and for the most recent crime numbers to be below 500. And the prime table, look at the city data, right? Now, he added something right here. This applies to all cities, right? Do not add or subtract from the 500. For tertiary, look for numbers to be below 300. Well, Phoenix, Arizona is not a tertiary market. This is a market. This is the main market here. So we're looking for numbers that's going to be right here below 500. So let's see how is Phoenix, Arizona. I'm going to open this up now because in order to get that number, you're scrolling down. Oh, look at where we're going. See that? Right here, crime rates in Phoenix by the year. Now, what you want to do, you want to go back to the first that is able to pick up. Go all the way back to that last rate, which is 558. Now you're saying, whoa, this is 558. But what you're looking for is a trend. Here we go. What you're looking for is a trend. 558, 546. You see that the trend has it coming down. Now you got a little bit of bump right here, but look, it comes right back down. So it's just like a regular wave. It goes up and down and up and down. But you want your city data crime index to be less than 500. Now, so what you do, okay, right here, I'm going to put it says 15 years ago, but go back as far as you can go. All right, go if it's 15, if you see that you're greater than 15, then you don't have to go that far back. Yes, you could go 15 back. All right, and grab the number. Right. So at 558.6, and then the most recent number is 402.9. So I got another green. So what this is telling, and what you want to see, if you're starting to see, and I've been using this form for a while. So I've actually I can actually see that when population is declining, job growth is declining, I can also see crime rate increasing. And it's no joke. You can actually see that happening. So let's now discuss the last thing on the city. Let's discuss this last thing on the city. And the last thing on the city is job growth. Now, for job growth, I'm going to click on Department of Numbers. And sometimes my window opens and sometimes it doesn't. I have to figure out why. But I'm going to go over here, open up a window, paste. Okay, so you got Department of Numbers. Now, with Department of Numbers, you got city, state, you have your CES jobs and the whole 1 year. Now, what we want to look at in the CS is the current employment statistics, right? But what we're going to do, we want to put this in alphabetical order because we don't feel like having to look, trying to find Phoenix, Arizona. Put it in alphabetical order and just shoot down to Phoenix and look at what you have, right? So now we have negative 3.65, right? Holy smoke. Now watch. I know what y'all thinking, but I'm going to show you something else. I'm going to show you something. Negative 3.65. We got a red. Wait a minute. We got a red. Hold on. Is this not COVID? Is this not COVID time? Yes, it is. Yes, it is. So when it comes to during this time, when it came to the job growth and the numbers in the city, I mean the neighborhood, right? You may have to take extra steps because remember, COVID affected the community. Cities that were doing well before COVID are most likely going to be doing well after COVID and during COVID. Yeah, they dropped a little, but they were able to carry on, right? So is this number true that it's a negative 3.65? Wait a minute, let's check it out. So what I want to do here, there's two things I'm going to show you. One, let's go to bestplaces.net. And let's put in Phoenix, Arizona. Now I'm going to show you something else too, okay? Just hold tight for me. Phoenix, Arizona, right? So it's going to come up and it's going to say, you're going to scroll down, you're going to read through all of this here, read through all of this here, read through all of this here, here we go. Phoenix, Arizona. Job growth, 3.3%, right? You say, okay, wait a minute now, 3.3, but the other one said negative. Okay, let me show you something. Now I'm going to put the 3.3 in here. Okay, however, if you want to know what was going on before COVID, I'm going to show you. There's a little tool that we could use, and this tool is called the Wayback Machine. Now, some of you may be familiar with the Wayback Machine. The Wayback Machine takes you way back. Just had to say that. The Wayback Machine records websites and the data from the websites. So with that data, if you go to right here, hold on one second. Hold on one second. Give me 1 minute. I want to go back to, no. Okay, give me 1 second. I want to go back to jobs. There you go. So the reason why I want to go back here is because this is going to be the source that's going to have me to go way back. So, okay, here we go. So what you're going to see me do, I want to know what was Phoenix doing before COVID? What were they doing before COVID? So I'm going to take the site just like this. I'm going to copy this URL and I'm going to come over here to Wayback Machine. I'm going to paste that URL inside the Wayback Machine, right? Then I'm going to hit enter. Give it a little while. Oh, done. So now, as you can see here, these are all calendars. If you look up top here, if you look right here, you got 2021, here's 2020, here's 2019, okay? Wait a minute. So when did COVID actually was, I'm gonna say March, it was actually reported, but I believe, if you want to say, well, actually it could have been January, that's cool, of 2020. But we want to know what was happening before then. When did things really kick in? So with the Wayback Machine, we could go right here to December 5th, 2019. Click on this so you could get the screenshot of the COVID, not of the COVID, of the jobs. Here we go, of Department of Numbers. Put it in order, because as you can see, this just took us back to October. Now, the way this is situated is if you hit December, it's going to take you back about a month or two back. So if you want, you may want to go into January 2020, and that way it would take you back 2 months back. But the way they record it, they're not going. They don't, on their calendar. It's not going to be situated for that particular month. It may be back a month or two. Okay, but I just want to know what was Phoenix, Arizona, okay, before COVID. Right here, 2.61. So you could take this number and say, okay, 2.61 before. And if you really wanted to know what else was going on, say in 2000 and right here, this is 2020, okay, of February. Let's see if we get this a little closer. Phoenix, Arizona, right here. See that? You saw that? 3.36. You see this? Oops. Stop that. Stop. All right. My bad, everyone. I hit the button. But as you can see, that was 3.36. So as Phoenix, Arizona was a strong market from the beginning. I know I'm getting people dizzy by rolling up and down, because I'm getting dizzy by rolling up and down. But as you can see, Phoenix was a strong market before COVID. And if you know about Phoenix, Arizona today, it's a hot market even today. So what I would do is, for knowing that this market is a strong market, I would take the 3.36, put it right here, or you could let the 3.30 stay. But put a note right here. This is, what was that, December? What was that? February. Okay. So this is February 2020. All right. Pre-COVID. All right. So this lets whoever's going to be reviewing this document, whether it's someone on your team or an investor, they're going to say, well, how did you get that number? You say, well, you used the Wayback Machine. You wanted to know what was going on in the market before COVID. All right. And right here, you put the note there, and then boom. So you have a little note right here. Okay. So now I want to show you one other thing. Because you may say, well, Darryl, city data, how accurate is it? Is it up to date? I want to show you something. You can also use, and sometimes I do this. Hold on a minute. Now I'm going to type over this, or let's see if I can talk into the machine. Bureau of Labor and Statistics. I think I may be hitting the wrong one. You can also pull this data from Census Bureau when it comes to population. And you can also pull this data from the Bureau of Labor and Statistics. Okay. And I want to, it's a quick facts. Hold on one second. It's right. I may be on the wrong spot, everyone. But it's the Bureau of Labor Statistics.
Darryl, quick facts of census. Bureau of Labor Statistics is the QCEW.
Okay. Thank you very much. So I want to show you something. Let's go to census real quick, because census will also, thank you. Access local data. Okay, so with the census is I'm going to say is a little more, I like to say it's a little more accurate than city data. Sometimes people have gotten lost. I'm going to say a little misguided using the Census Bureau and census facts. And so sometimes that's what I think city data is just easy for that. But you could put in right here, Phoenix, Arizona. I gotta let it populate. There it is. If you know what happened was I typed in Phoenix, Arizona. Don't type in Phoenix. Just start typing Phoenix, and then it will say Phoenix City, and then as you can see, it'll come up right here. All right. So if you have the population, you're already. If I told you to get to 2,000, you could Google 2,000, and then you could get the estimated population of 2019. Either way it go, you're going to see a growth in population. Even from 2010 to 2019, you're going to see a strong growth. There's a lot of information that's even here when it comes to median household income, which is right here, median household income. Now, this goes from 2015 to 2019. We need it from 2000. So you would pick, so what I normally would do, I pick 2000, and then I would just look at the difference here. But you can sometimes do that. All right. Now, I'm going to jump out of this right quick because of time. We're running into time. I want to show you something that's going to help you with the neighborhood. All the instructions are here for the neighborhood. And city data is just a quick and easy way to get the information. Okay. But you also have another resource that's called Justice Map. All right. Right. I use Justice Map. My team and I use Justice Map sometimes when we're looking for a property. I mean, looking for numbers for a particular property, and we will input the, we'll input the data. And now I use City Map only for the neighborhood. For the neighborhood, okay. That's when I use Justice Map. Excuse me, Justice Map. Okay. All right. So when it's colored up like this, just hit base map and it takes it away. So if there's a particular neighborhood that you're trying to get numbers on, just use your map, get the numbers, and input it, because this takes it down to the city. All right. Now I'm going to show you. Now, hold on a minute, because I don't want to. Let me. Okay. So if I had an see this right here, let's just take this here. This is going to tell you why my map. Oh, income. That's why. Come up here, hit income. Boom. Look at there. See that beautiful colors? The colors here indicates the income. A lot of times, what I would do when I'm working off of this particular off of city data, this particular map, if you follow the instructions on that form that I gave you, you would put the zip code here, and the zip code will bring you right into it will go straight to the neighborhood where the property is located. Now let me tell you some gravy about this here. I'm gonna give you some information here. Okay. If you want to take this color out, you can slide the opacity over. This way you can see your roads. When you're ready to do the neighborhoods, you can see your roads. Now, if you want to know more about the city, like where the money spots are. I'm going to zoom in a little bit like this. And if you take a look, and again, city data, it may not be perfect, but it's pretty good for a lot of stuff. It also lets you see these color codes here, whether it's light, dark. The darker, the more money in the neighborhoods. Okay, see that? The lighter, that's less money. So if you way over here, as you can see, see this here, and you so happen I've slid the thing across. Okay, here's your income levels here, and as you come across, see this, your income levels. See that they start going up. So this is going to be your guide to help you with your neighborhood. But first, you want to take the opacity out so you can see your building. Click on it. You see how this is right here. And then what's going to help you even more, once that turns yellow, come up here to this little box, hit show more, and look what happens. This sucker gives you the breakdown of the median resident age, which you don't need that, but you do need the poverty level, you need unemployment, you need the median contract rent, you need the household condo value, you need the household income value. Now, this is what I like about the justice map. The justice map lets you see street by street on income, okay? On income. But guess what, everyone? I want to give you another little something to look at. When you're dealing with, when you need to get down into the neighborhoods to make sure that you could hit your marks, right? I clicked on every direct door. I may be, let me see. So I'm going to try something here, everyone, but only because I really need a zip code. Here, so I'm going to put a zip code in. All right, 11233. For those of you from Brooklyn, New York, you know that's Bed-Stuy. All right, but I'm only doing this because I want to show you something. Okay, you can zoom in to a street and see what the average income is. So all you got to do is hover over, it turns purple. And if you look over here where it says income, look at that. It's telling you 42,000, right? Here, 38,000. Here, 34,000. These are all postal routes. What you're looking at are the postal routes that the postman take, right? So what's the income here? Over here, 41,000. So around this area, you're averaging around $42,000. So if that was information that you needed for household income, 42,000, then you would put that in, and you could get your numbers. So I'm going to stop right here because I just wanted to show the city and show you some of the that this is the form that we use. Now, I just want to say this right quick. The city could be perfect. Perfect. But when you get down here to this neighborhood, it may not be that good. So does that mean you would dump the city? No, that doesn't mean that. What that means is keep the city, but use city data or what other source that you have to pick the part of the city, right, that has the money. And you have city data right here that will show you where the money is. So don't drop the city, right? Don't drop the city. Just look in the different parts of the neighborhood. Now, suppose I have red here in population growth, and I have red in job growth, and I had red in crime. Now, for you, that some of that may not bother you. You may say, no, that doesn't bother me, because whatever your niche is, whatever you're looking for, that doesn't bother you. But for my team, that does bother us. We will not invest in a market with a declining population and job growth is declining and crime is on the increase. We're not going to go there. All right, we're not going to go there. So if now I want to say this, suppose we're looking and we see a trend, increased population growth, increased job growth. The crime levels have are decreasing, but I got one of these are red. Do that mean that I'm not going to go to the city? Wrong. That means I am going to come to the city, because if you're looking at years and you want to see at least a good 5-10 years of growth, and if you see that, I guarantee you, well, I shouldn't say that. I should not be guaranteeing anything. What I believe is, I'm going to project that these numbers are going to grow too. Only because if everything is going well, people are going to come there. So the median household income going to increase. The condo values. In other words, you're going to see the growth all the way across the board. You are going to see the growth across the board. So, any questions? Okay, let's see. Chat.
Oh, it's me right here. Hey, Darryl, this is Greg.
Hey, Greg, how you doing?
I'm fine. Thank you so much for it. I'm mind blown right now for all this data you're showing. And so, question. I know we're using city data. I'm assuming city data is grabbing the information from the census and the different official sources. Would it be better to go directly to the official sources sometime, most of the time, rather than city data?
Yes, yes. If you want to use the Census or Bureau of Labor Statistics, or what was the other one?
Department of Labor.
Department of Labor. Yeah. Yeah, definitely. I would say definitely go there. Now, sometimes be careful, because I have found that the census, Bureau of Labor Statistics sometimes will pull a MSA. It won't pull a city. And I've noticed that a couple of times. So I wind up either using city data, or sometimes you may see me use you'll see me use this one over here. Where is it? Right there, Data USA. Or sometimes you'll see me use this here. Long as I could get the city, that's fine, because I don't want the MSA. So every now and then I will use Data USA to gather information. But I would definitely say, if you could manipulate the Bureau of Labor Statistics and census.gov, yeah, use it. Yep.
Thank you, Darryl. Thank you.
No problem.
So Darryl, I just like to say, great job for displaying the form the way it is. For those that know me on here, know I teach market analysis for the CCIM Institute. Darryl did an amazing job here. All I want to do is caution a couple of cautionary tales here, and that is, this is bringing you to not quite current, because you can't get current. So even all that data up to 2020 is all guessed by census. All the rest of these city data, best cities, they're all aggregating from census. And the 2010 was the last time the census was done, until last year, but we won't see the 2020 data in census until fourth quarter this year, maybe first quarter next year. So we still have to rely on what their predictions are, because that's all they are predictions. That's why 2019 is in parentheses, because it's a prediction. Good news is everybody has the same data. So nobody can know for sure what that number is. But what my cautionary tale here is, do not rely on just past performance. Past performance does not produce future results. So it may be the case, and I know, Darryl, you said you would not invest in an area that has negative job growth and negative population growth over the last 15, 20 years. But what if Mazda Toyota moved their manufacturing plant to that city? That is going to produce explosive employment and population growth. You've got to know those future numbers. Do not just look at the past. You must also look at the future. So for initial underwriting and to say, you know, whether I want to move forward with the deal or not and actually dig into the numbers, this is really good for that. But then once you get to the point where you think you're going to continue to move forward, going with an LOI, now you really got to dig deep and you got to go get you some future data. This does not provide the future data, but that is available. There's a lot of math involved to do it. That's all I got to say about that. Other than that, Darryl, great job.
Thank you. And Rick, if always the one thing that I didn't say here, but something that I constantly teach is if any of my partners are on here, they will verify that I say verify, 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 verify. I always say it 3 times. This time I said it 6. But you should verify your data. You should. If you ask me even for an underwrite report, I always send you the underwrite report and I say, please verify the data that's on it. Okay, so you should always verify your data. Always, Rick, always. 3/2020 official. This info. I'm just trying to catch questions, everyone, see if there were any questions. Oh, it wasn't. It was just, that was it.
Yeah, there aren't much questions.
Yeah.
Wait, I do have another question. Oh, sorry, someone else.
Sure.
Talking.
Go ahead, Rick.
Well, so my question was more to David in terms of where do I get what are good sources for future data? We know that this is good source for past data. What are some good sources for future data?
So the only way to get your future data, it's not the only way, but the best way, is use Census Quick Facts for your population. You got to get your current numbers. There's a process. It's called an economic base analysis. I teach the process. You've got to get your current numbers first, and you get your all your economic data on Bureau of Labor Statistics. So there's a table called QCEW. That's the Quarterly Census of Employment and Wages. In those tables, then you can identify what are called your basic jobs. And I've got to get out of here because I've got another class I have to teach in 3 minutes. So I don't have time to talk about it. But your basic jobs are your export sector jobs, and any location quotient. And in those tables, it will give you the LQ, which is location quotient. Anything greater than 1 is considered an export sector job. If you have employment growth in those sectors, then you can look at those sectors to determine future population. And there's a whole calculation to do that. And I teach that. And I'm sorry, Rick, I just don't have time to go into it at this moment. Angel's on here, and Angel doesn't have to go to my class. She can explain to you because she's seen that webinar probably 3 or 4 times. But guys, I got to go. It's been great. And Darryl, again, amazing job. You did wonderful.
Fantastic. Thank you, man. Thank you.
Yes.
Thank you. So Rick, the next time he has that class, make sure you're there, because his class is more detailed. It's very detailed, right? What I'm giving here is not detailed. I'm giving you information that you're going to need if you want to pick the area of your investments, and that really, that's what I'm looking at. Usually, and he said something about wow, I just got a brain freeze. Anyway, those numbers,
future projections.
Yeah, about the projections. I think a lot of times, sometimes too much information can make you say no, and stuff like you have to. All I'm gonna say is just do your homework. Stay in contact with the economic and development. They will tell you anything you need to know. Do not hesitate to call them people. They want you to come there and invest in their city. So I'm definitely telling you, if you want to know what's going on in your city, check with the economic development department. Go to the commerce. If you out of state, call them. They will talk to you, and they will let you know. All right. So the form that I use, like I said, it's not for everyone, but that's the form that my team and I use. So and a lot of times, um, you may hear me ask an investor, when I say what market you invest in, and they say, well, I invest in Texas market, and I may say, why do you invest in that market? I just want, I ask because I want to see if they have parameters, and that's the reason why I ask. A lot of investors don't have parameters. They just say, I have growth. I look for this. I look for that. But what are you? I don't know. It's like I need numbers, something to guide me. Because if I don't get guided, I'm going to be either too high or too low. I'm not going to be in the ballpark. So I like the fact that Neil Bauer gave me the guidance that I needed, and that's what I use.
Thanks so much,
again.
Darryl. That was great.
Thank you very much.
Question.
Yeah, is Greg again, Darryl? Or unless somebody else want to ask a question, because I've already asked one already.
Sure, I'd like to.
Okay.
Darryl, I noticed that on the form, it's pretty well focusing on everything that's maybe related to like more than 250,000 in terms of population. How do we plug in the numbers up to how small of a population base will this actually be accurate?
Okay, hold on a minute. Okay. All right. So here you have, for population, we have 4 categories, less than a quarter. Now this is where you're going to have to go in over here. See, I have some instructions, everyone. See, right here. If you invest in expensive states such as New York or California, it says, and that's why you got to read all of the instructions, which I didn't read all the instructions. If you invest in expensive states such as New York or California, bump up the number $5,000 to $10,000. Hold on a minute. Yeah, all of these numbers, and if something like, okay, and if you're investing in the Midwest, low-cost states such as Ohio or Missouri, then you could bump the number down by 5,000. But under no condition anywhere in the United States should you have median household income below $35,000. So Neil Bauer says it doesn't matter. Once you, if you're in the cities or if you're outside the city, that's why he added the tertiaries, what I spoke of right here. He added this, and he also added this here about the Midwest, because that wasn't there. Anyone who took his course the first time, you know that wasn't there. All right. So the reason why he added that, because he saw that, wait a minute, there's definitely is a difference in the smaller locales. Okay, so he said, but by no means at all should you go below 35,000. So even if you're in a city of a population that's real small, you still need to hit your marks on what you're going to give your investors. You're going to still need to have those dollar signs where they need to be. Otherwise, you're taking a risk on that particular property. You're going to be taking a risk. Did I answer your question, Mike?
Yeah, I have to play around with it in order to make sure that it'll work for, I'm going to say, places that are going to be between 20 to 50,000 in population.
Now, when you do get to that small, Mike, also, usually smaller cities are going to have something connected to it. I think that's called, help me out, somebody, anchored. It's anchored to the city. So, matter of fact, today I was looking at a property and it was a small population. So I said to the individual, look at the cities what's anchored to this little town, because if there's, I said, look at what's anchored and look at what's in it. If you're in a little small town, what are the major employers there? If there's only one major employer in that town and there's no anchors around it, if that one employer go out of business, you in trouble.
Well, what I'm finding often is that some of the smaller towns, the real employment is not in that county. It may be next door.
Yeah, that's an anchor, right?
Yeah.
Yeah, that's an anchor. So, and that's why I say, just because you're in a small populated city, that doesn't mean to run. No, that means let me look around it. Who's anchored to that city? See what I'm saying? Who's anchored there?
Okay, thanks.
Yeah.
Hey, Darryl, Moses.
Yes.
At what point, or do you at all pay attention to the school data in an area that you're looking to pull the trigger on?
Excellent question. When I look at, there's several other factors that we, and I just want to tell everyone, what you're looking at, this form here is just, don't let this form be the deciding factor for you. All right. Let this form just be a guide or a rule of thumb or something. I don't know if I'm saying the right words, but let it be a guide for you, because you still have to go even deeper. Now, I may have showed you the crime index map on here and what numbers I'm looking for, but I'm telling you right now, and I'm going to answer your question, Moses. I'm telling you right now, everyone, I always go to at least 3 crime maps: spot crime, LexisNexis, and then I type in the city, and I type in the city, state, no, city, state, police department crime map, because I want to see if the police department have their own crime map, and I will go there. I want to see what's going on around there. Now, of course, everywhere there's crime everywhere, so I'm expecting to see that, but I don't want to see some heavy stuff. Okay, I don't want to say what it is. So to answer Moses' question, Moses, yes, this is my guide to tell me, okay, Darryl, this city here is pretty good, right? Now the city is good, Moses, but that doesn't mean the neighborhood is good. That's why I said, if I got greens in the city, I'm gonna keep the city. But if I got a bunch of reds in that neighborhood, I'm telling you, Moses, most likely the schools are not good either. Now you still could check, but I'm telling you, if my neighborhood numbers, hold on a minute, right here, if these are all red or a bunch of reds, I'm sorry, but I'm not putting my investors in this area, because 9 times out of 10, the schools are red too. So yes, but Moses, yes, we still have to look at the schools, and we have to look at other things. But this is our guide. And like my team and I, we'll use it for this. Again, I'm going to say this: we will use it for the city, and if the city is good, then we can start looking inside the neighborhoods, because all neighborhoods are not the same. Okay.
My question is, you did say that you're based in New Jersey, I believe, but then you have different deals in different states. How far would you say to go as far as investing, even though you have this data? Oh, by the way, thank you for the presentation.
Oh, thank you. Thank you for coming. Okay, so let me back up if I said something. If I said that I'm in, that like I'm in a bunch of cities and states, I want to retract that. right now. I live in New Jersey, but I invest in Texas and Arizona. I'm on deals that's in Georgia and Mississippi. We closed on two deals over there. But I was brought in on those particular deals. I didn't go searching for those deals because Texas, Georgia, and Mississippi, they're not my markets. But it was an opportunity that came and I jumped on it. So, and to answer Anna's question, and I think it's going to be more on markets. Anna, what I do, what I practice to my team is, and when we first started, was not to look at no more than two markets, because in this business, it's about building relationships. And if you're, and I'm telling you from experience, Anna, when I first got into this, I was bouncing around, Anna. I was everywhere. I was in North Dakota, South Dakota. I was out there in New Mexico. I was out there in Georgia, Florida, and I was everywhere. But I was everywhere because I didn't have nothing to guide me. I didn't have nothing that could reel me in, because man, I was a wild thing out there just looking here and there. But when I got this here, then I was able to focus. Well, this is where I need to look and stuff like that. And do you know something, Anna? After that, my jumping around stopped. It seriously stopped. And I was in Utah, Arizona, and Texas. I wound up dropping Utah, and I wound up dropping Arizona. So I went only back to Texas. And I was in Texas for a long time until I got a partner who lives in Phoenix. She said, Darryl, come back because I'm here now. I said, okay, I'll come back to Phoenix. And that's how I got back into Phoenix. But I'm only in two markets. But use the form. You could use it, to help you find, if this is what you want to do, then you could use it to narrow your search down to where you want to go. But I want to tell everyone, look at what your goal is and what you want to achieve. If this form could help you, that's fantastic. Because in our industry, there are so many niches that you could grab into and make profit from. So, like I said, that's why I said early on, this may be good for some, but it may not be good for everyone. Oh, I see some 11s and 12s. Let me see if there's a question. Please, okay. Great.
All right, so Darryl, this is Greg. Can I ask a question?
Sure, you can ask a question.
Before I start,
I'm sure you can ask a question. Just messing with you, man.
Hey, as I said earlier, mind blowing. Great job, great presentation, and the fact that you presented so much access to data, and I love data, which is one of my flaws. Is I like too much information, which is something I'm working on. It's my daughter laughing right there. Sorry. All right, so now I view this as one of multi layers of screening that you do, where you screen the particular city. So I would imagine you've already screened a state, and then you screen for a particular city, and then once you're done with that screen, then you screen to see where the projection is for the for that city and the community development. And screening your particular state, how did you actually get to that part before you got here? How did you decide, you know what, I'm going to Texas? I know you said you're in multiple states, and Arizona was more, you were motivated because somebody else works lives there, you can partner with. But for Texas, for instance, how did you say, let me go for Texas?
Well, that is, I love that question. Thank you very much. And actually, when we're looking, and I'm going to say, I think majority of us, when we're looking to invest in an area, we call out the state. Now, I could be wrong, and I want someone here to correct me if I'm wrong. Don't just let me say this and then y'all say, that guy's crazy. He wasn't right. So you tell me that right now if I'm wrong. I think a lot of times we don't really look at the state. We look at, in other words, we look at the city before the state. Not unless we know that that is and I'm not getting political, not unless we know that that state is a blue state. Then we, like New York, you say, okay, well that's New York is a blue state. There's other parameters then that you're going to look at. Yeah, you're right, and I will look at that state. That's why, although I was born and raised Brooklyn, New York, I sold my property in Brooklyn, New York, and I'm investing out of New York, out of New Jersey, because those states are not landlord. I'm just gonna say they're not friendly. They don't follow the law. I hate to say landlord friendly or tenant friendly. I'm just looking for fairness. That's it. I don't care if it's landlord friendly, tenant friendly. All I want is fairness. You don't pay, then you should move out. Simple as that. That's it. Not you don't pay, you get to stay 2 years, and then I still don't get nothing. Come on. So all I'm looking for is fairness. Not landlord friendly, not tenant friendly, but fair friendly. That's all I'm looking for. So in reference to your question about the state, yes, my team and I, we do look at the state, because if it is a state, and we know that off the top, if it is a state, I guess I'm contradicting myself, but I'm correcting myself, everyone, not contradicting, correcting. If that is a state that we know are leaning more towards the tenants, we will not go there. Okay, we will not go there. That's what I'm gonna say. I hope did I answer your question, Gregory?
Actually, yeah, that's a great. That's actually one of the things I was wondering. That's a great answer, because I was wondering, and what's the catalyst to decide one state compared to the other. And one of the things I've been following is certain states, they're more difficult or less fair, which makes sense on landlords, rather than being more equitable to the landlords.
Yeah, I totally agree.
Thank you.
I totally agree. But Gregory.
Yes.
When we get into the billions, then we could go to New York and just place the money there.
Oh yes, definitely.
All right. Listen, I'm not gonna dug out my state now. We're gonna cut this one short. Any more questions?
Anna, I think you were trying to. I think Anna was trying to get a question out.
Okay, Anna.
Oh, I was just going to piggyback in that and ask which website, but like you said, the power of Google, so I Googled it myself.
I'm gonna tell you something. Google gives you a lot of information. Use it. Use Google. Okay, and then just confirm the data. But I found Google to be pretty accurate. So yeah, but use Google. Google is fantastic.
Any other questions from any of the participants in the room?
If anyone would like the form, please let me know. Just shoot me an email. I'll be more than happy to send it to you.
I have a question.
Yes.
Darryl, great job. Thank you.
Thank you very much, sir.
All right. What's your primary asset class, and like why do you choose those particular asset classes?
Okay. You know something, as I was sitting here, I remember a conversation. I'm gonna get to your question, James. I am. As I'm sitting here, I remember a conversation that I had with a person. And this person is a nurse. Well, I'm a nurse. And nurses, we go by numbers, facts, data. We're data driven. And I think I look back now, and I honestly believe that the reason why I need numbers is because of me being a nurse. I know that temperature 98.6, right? Temperature. So if I see that the temperature is 99, oh, wait a minute, that's a low grade temp. And and because of that, I think that's the reason why I'm so driven on numbers, and where I want to take different courses on how to underwrite so I can see the numbers. I know that this industry, you're not going to be perfect. There's no perfect in this industry, but I need numbers. I need guidance. And by me being a nurse and into science, I'm just used to numbers. All right, and I have to admit that with me being a nurse, matter of fact, I was a pediatric burn nurse, so I dealt with numbers all the time, making sure that the the ratios were correct on these kids when they're coming in burnt. And I don't mean to make anyone wheezy, but I have to know the numbers of how much fluid to give them and how much not to give them and stuff like that. Now, to answer James' question, James, repeat your question for me again, because I went off on a tantrum just then.
No worries, thanks. I was just curious, when you analyze a market and then you look into the asset classes in those markets, what asset classes do you focus on, and why?
Okay, now when you say asset class, you mean like
A,
you mean
B,
like B
C?
class, C
Yeah.
class, stuff like that? Okay.
Yeah, exactly.
Excellent question. I don't like, this is just a personal thing, and I guess this goes back to my nursing thing. I don't like using A, B, C. Why? Because it is very subjective. Very subjective. Some person could say, no, that's not an A, that's an A plus. Another person could say, nope, that's a C. That's a C minus, right? However, you know what's not subjective? The age of construction. That's not subjective. Year built, 2021. What is that? Brand new. Okay. We know that from 2021 back, some going to say 10 years, some would say 15. It's a number. So you subtract 10 or 15 years back, that takes you to your next classification of a building. So if I use if you hear me use a letter, it's only going to be A, B, or C. You're not going to hear me say A plus, B plus, C, D, E, F, G plus, minus, and all of that. I'm not going to do it. I will say A, but I relate those letters to the numbers of the construction. I'm not going to go to the plus and the minus. Okay. And to go just one step deeper, if a broker sends me a property, construction, 1960, this is just an example, okay? 1960. He says, this is a B class building. I'm going to ask, and I've taught my team to ask, if that is a B class building, has the plumbing been replaced and have the electricity been replaced? If they say no, then you put that building as a C and leave it where it is. But you don't need to get into that with them. You just do it on your records that that's a C. Any questions?
Could you talk a little bit about the titles in your team? You talk about that you have a team. So can you tell us a little bit exactly about the team, about the titles in the team and what they do?
Okay. Yeah. The title, I'm not being funny, Anna. Okay. When I say this, I'm not being funny. All right. The title that everyone has is investor. That's the title. You know why? Because I look, each of us have our markets that we look in. I look in Texas, Arizona. The other team members may look in North Carolina. I'm calling out the states, but it's not just the states. It's the city. But I just want to call out the state just for the purpose. Okay. So I may look in Texas, Arizona. Other members will look in North Carolina, South Carolina, Georgia, Florida. Okay. So that, and the reason why we do that is because if all we want to do, once we find a property, at that time, we will come together as one to take that property down in the team. It is that same concept that I have brought to the commercial multifamily masterminds meeting. That if we could work together to take a property down, then I think that's just beautiful. Anna, did I answer your question? I hope she didn't get mad at me.
No, you didn't. I guess my question was more, okay, so in our team, we have, a lawyer and we have a CPA and we have this. Is that what you're talking about?
Okay. So you want to know about the whole, I think you're talking about my micro
because
team.
I do hear, yes, because I do hear a lot about, the team makes the structure.
Okay.
The team is everything. So, yeah.
Yeah. Okay. Okay. All right. So, yes, no, Anna, you're absolutely correct. Yes. We do have our attorneys. So by me being in Texas, I have my Texas attorney. By Robert. Robert is, I do believe he's in Texas, so that would be the Texas attorney. Robert, are you in another state besides Texas?
No, Darryl. Just Texas.
Okay.
For myself, but
okay.
But remember, we lend nationwide, so
yeah,
doing the loans and mortgages nationwide.
Right. So Robert and I, we look in Texas, all right, and so yes, we have built that relationship with our property managers, with our attorneys, we even have appraisers that we can talk to in those particular markets. So yes, you're absolutely right, Anna. We do have those people that are part of our extended family. I'm going to call it our extended family that we stay in heavy communication with.
Darryl, to further go on that, so what is the makeup of the team? You imagine your team is a football team, right?
Mm-hmm.
Okay, all right. So I don't know if you're a Giants fan, right?
Uh-huh.
And so, all right. So who's the quarterback? Who's the lineman? Who's doing what position? Now,
okay.
You're a Giant fan, so I know you're not winning, but the
Well, actually, I'm an Eagles fan.
Okay, or still the same. But
my wife, she's a Giant. My wife is a Giant fan, so sometimes we got the rivalry there. But I'm not going to discuss that. But no, I don't. For the sake of the team, I may have created the team and the founder, but decisions are made equally amongst all of us. We all, I would bring, like, for example, we're in the process of working on creating our own funding source. So I wouldn't just say, well, I'm going to, this is what we're going to do. What we did, we brought it to each of the members and said, how about we do this? And that way we all have a voting right as to if we're going to make that kind of move. So I don't want to say that just because I create the team, I'm going to be the one that's going to call the shots and all of that. I don't operate that way. I think Robert may happen to support me on that and say, no, Darryl is not a dictator. I believe in hearing everyone out and stuff like that. And if the team says no, then no. If we say yes, then yes.
But do you have somebody? You mentioned you have a lawyer. Do you have somebody who does accountants? who does auditing, who does lead finding?
Okay.
Is there particular roles like that?
Okay. In reference to that, that's an excellent question. I can supply that information to them because I have the capabilities. So if they need, like, there was a time where I said to everyone, listen, we got to pick it up, right? I said, we got to start making more phone calls. We got to start getting out there. I said, I want everyone to reach out to me during the week. I'm going to go on CoStar and I'm going to get you the information that you need so that you could call these people so that we could try to get deals done. So by me having those capabilities, I will be the provider for that. Because if you're trying to get into 50, 100, 150 units, it's going to be tough to break that corporate veil. You know what I'm saying? You have to break the corporate veil to find out who that owner is. You could go to the secretary. I know what a lot of people are saying. You could go to the Secretary of State and you could try to find who that owner is. The only thing you're going to get is the registered agent. If that company was set up by Anderson Business Services or Christina Leo, you're not going to find me. I'm going to tell you that right now. If you try looking for me, it's not going to happen. You'll find somebody else, but you won't find me.
So Darryl, can we talk a little bit about how syndications work and the fact that when you're buying most of these deals, you're not buying a small apartment complex, 20, 30 units that are run, owned, managed, everything by one person. You're buying a business, and typically a multi-million-dollar business. And one of the standard practices when you're buying a business like that is that Darryl and other deal sponsors in these syndications spend an enormous amount of time building relationships in their local markets. And so they never go into a deal like this without professional third-party property management, without an asset manager to oversee the property managers, that oversees also the legal side. And typically on your legal team, you're going to have an SEC attorney, you'll have a local real estate attorney, and you may have a contractual law attorney. So there's several different pieces to each one of these businesses, in addition to the professional property management that will have a whole cadre of business platforms behind them that typically it's costing anywhere from $30,000 to $50,000 a year for all of the back end pieces of the technology. You'll have a CPA, and typically we will want to look for a CPA or a firm that is local. So we don't want to use, in my instance, I'm from Chicago. We don't want to use a Chicago firm that may not be as in tune to what Texas law is. So we will typically try to find a Texas firm, or particularly with the CPAs, at least on my side, that's what we try to do. And this is not what I want to say, the structure of a typical syndication can change from asset to asset. Mm-hmm. But typically within every single one of them, you'll always have those same ingredients. And on the partnership team that's running the individual syndication, not on the property management, not the third-party members. We always look for professional third-party members, but the actual team, typically you'll have a deal sponsor, and then you'll also have a key principal, and you'll also typically have limited partners. And on the general partnership side of the team, you'll have underwriters, somebody who's typically designated as the underwriter of the deal. You have people that are typically designated as capital raisers on the team that deal with investor relations. So there's a lot of moving parts in each individual deal. And then if you want to dig into any of those terms, then I'm sure Darryl would be happy to explain all of them.
Thank you.
All right.